doing a trend pullback. Okay, so it's doing this thing. It's a downtrend, right? It's doing a pullback here as a set 1, comes down, does not make a lower low. Then he does a set 2, he goes higher, right? Higher than that price. And then he rolls over, right? He does some digestion, comes down, more digestion, and then a range, which is the money spot. It is in this, assuming this is your higher time frame, you would then go down to a lower time frame. In this particular case, I'm going to go down to the 3-minute. I'm going to go to that area, and I'm going to walk you through here. So this dotted line here, to me, is the end of New York. So Asia opens up here, okay, and until this area here. Let me go into where is the area here? Asia opens up here by taking out New York. Okay, Asia opens up, takes out New York, and where is the line? Oops. Okay, into this area as it comes down lower and lower and lower and lower, right? Okay, so I'm going to draw my line. All right, so what this is doing is as you were in this range preparing for your markets to go down on your higher time frame, for example, on the 15 minutes, what this is doing is Asia is looking at this whole thing also and looking at this as saying, I am on the 3-minute chart now. I am in an area that's starting to take out the market session breaks as a cheese trade, and as I'm doing a pullback, okay, the first pullback comes down, no lower low. Second pullback gets higher and deeper, then goes up higher aggressively as if it's a better price. People will turn into buyers, and as it comes down and ranges, even for you on a 3-minute, this now becomes a cheese trade. However, what's the rule for the cheese trade once the trade is active? How do you normally exit? Well, if you start seeing a range, you got to get out, right? However, in this particular case, if I take you back to the 15, okay, and I show you that area is just a market movement that is still ongoing. So when you line up with an eclipse, your best methodology for exiting is going to come out with your higher time frames range for exit. Your lower time frames range can be a potential area to scale in. So you see in this particular case is that's where the exit would be on the 3 minutes, right? So your entry over here on the 3 minutes, which is the same spot the 15-minute is getting on, but you're getting out a lot sooner on your trading time frame, right? So, and as an eclipse, it tells you on these particular situations, you want to ride the markets a little bit longer. Okay, so as I told you, right, I have a one-on-one student that trades over 10 million in a fund, doing just this and nothing else, However, it is not everyone's cup of tea. I want to remind you that, because right now I am sure 9 out of 10 people are going to listen to this and they're only thinking about $10 million. I can do it too, rather than thinking about, is this suitable to my personality? If you always find what suits your personality, you will make more money than you can ever imagine. But if you always chase what everyone else is doing and where they're making money, it's going to be a suffering trip going forward, suffering journey going forward, because it's going to be hard to reach those kind of numbers, okay? Because you're not able to adapt and relate to it as easily as you might think. Okay, so build your skill level. Understand in this whole process, I've given you multiple edges. You got your anticipation, you got your cheese trades from the MPA 2.0, you've got your trend pullback failures, you've got your eclipse edges. All of this has multiple angles to it, whether you're an aggressive trader, whether you're a conservative trader, whether you're a patient trader. All of these angles can give you the ability for you to choose and say, which one are you? Okay? And once you find out which one you are, you maximize that. Okay? You maximize that, because the goal at the end of the day is for you to trade consistently and large. Okay, consistently and large. So if you keep this rhythm going, you will see a huge increase in your P&L, huge decrease in your faulty trades, and you should be able to take it further from there. So as we come to an end of the first module of the Iconic Trader program, I want you to think about everything you've learned so far in terms of the different edges, because what we're going to be doing going forward into the next module as we take you through the volume side of things, we're going to touch base more deeply into where do you take action a little bit more precisely and where do you not take action. So it's going to get a little bit more technical going forward. It's a lot of technical analysis, but it's more of there is no guesswork behind that. It is more you have to follow this exactly the way it is. Okay? So it's a more A plus B is equal to C approach rather than, well, if this is like this, then it may mean that, that, or that. No, it's not like that. Okay? So the whole next module is a little bit more refined and you have to follow it to the exact specifications. All right, guys. Congratulations to finishing the first module. I will see you in the next module. Cheers, guys. Bye for now.